Today we are going to be talking about managing company level deductions. So we're going to go over where they're set up, how they're applied onto a transaction, and kind of some of what the smaller details are. We are also going to be having one of our clients, Movado, Christina Manalo, is going to be with us today, and she's going to be guest hosting and going over how they actually use this inside of their system to benefit their company there. So my name is Taylor. I'm going to be going over, using the new features. We also have Mariana with us today. You may have worked with her in the past. You've probably seen her on chat or email, or maybe even had a Zoom meeting with her before. She's going to be showing you like where this is actually located and a little bit of how it's used. And then Frisco Doyle here will be helping manage the meeting while also going over and helping us with the question and answer. If you do have any questions, please ask them in the comments section of Facebook Live. We will answer them at the end of the meeting. And if any of you want to kind of start off in the comments section by just leaving a little shout out, where are you from, what company are you with, just kind of show everyone like kind of how far the reach is here at Brokermint. So feel free to do that in the comments section. Okay, so for this first part, we're going to have Mari show off a little bit of just kind of the basic details of what this change actually was.
Hello, everybody. Thank you for joining our live webinar. We are very excited to announce our latest enhancement to the system, Company Commission Plans. This awesome addition allows company deductions to be auto-generated just like agent deductions. So within the Commission Plans tab, you may now see a section called Paid by Company, which allows you to choose which deduction you would like to have pre-commission or post-commission deduction. Once you add appropriate information to the plan, you can assign it to the required user. This can be done under the Users tab. You just need to select Required User, navigate to the Commission Plans, select Required Plan. So now every transaction is created when you add this user to this transaction. Let's see the user. You will see all the company deductions here. If any changes need to be made, you can always add or remove deductions on a transaction basis. Now Taylor is going to walk you through the steps of how these commissions should be set up.
All right, cool. Well, thank you for the explanation there, Mari. So it's a really powerful tool, right? What we've added to the system. But it's really important to kind of know what these deductions actually do and how they work so that you can best utilize them inside of your system. So if we take any commission plan, let's just take the commission plan example here. Like Mari said, you'll have this new section here that says Paid by Company, and you can add either pre or post commission deductions. So there's a little explanation about what these are. Pre-commission deductions are any deductions that come out before it even gets to the agent. So this will literally remove the number from the agent's gross. The most common example we see of these would be like a referral fee or something like that, where it's just 25% straight off the top to somebody else. Now, a post-commission deduction is something that's taken just from the office's portion of the deal. So after it's gone to the agent, they've paid all their deductions, they've done their split, all that type of stuff. Whatever money comes back to the office, that's what a post-commission would remove an amount from. So to kind of demonstrate this a little bit, if we were to add on a pre-commission deduction, we would just give it a name. Let's just call this a pre-commission example for the moment. We then choose an amount or a percent. So just like every other deduction in Brokermint, you have different options of what it can be a percent of. As a short explanation of some of the more popular ones here, you'll see people do percentage of side income. So that's a percentage of the total income to whichever side of the deal that you're on. So if you were doing 3% on a listing side, this would be 25% of that gross commission. So that's one that would commonly be used with like a referral fee. The dollar sign is just like a flat fee. So let's just say, for example, you wanted to take off $1,500 every single time. You could do that as well. The other most common one used here would be percentage of price sold. So sometimes people take like fractions or very small percentages based off of the sold price of the property. That's where you could use this, is right here. You could do, for example, 0.5% of price sold. Now, after you've chosen whatever the correct option is here for your company, you would then say where this money is going to. Now, very rarely would it be the agent's company, because that'd just be used paying yourself, but maybe there's a scenario like that. More commonly, this would be going to a specific individual, maybe a company that sends you referrals, or maybe just an individual. Either way, you choose where the money's going to, you hit add, and there's your first pre-commission example. Now, post-commissions work exactly the same way. So you click add, you do post-commission deduction, give it a name, say where it's going to, or sorry, say what the amount is. Once again, you can either do percentages or flat dollar amounts. The options, though, are going to be a little bit different for this. Now, of course, you still have the dollar sign, you have percentage of price sold, but now you'll notice a new one for things like office gross, or even pre or post commission balances. Not all of these are used all that much, so I don't want to take up too much time with this, but a common one here is you do have the ability to choose post-commission balance, which would be the amount that's coming back to the office here. All right, and then after you've chosen whatever the amounts or percentages for your office, you then go ahead and say where it's getting paid to. Once again, choose a contact, hit add, and there you go. Now these deductions will happen on every single plan. You can continue to build out whatever happens on the agent side by adding pre or post split deductions down here that are paid by the agent. Once you're done choosing all the splits, now anyone you apply this plan to will automatically have these deductions happen on all of their transactions. We sometimes get questions about like, oh, well, what if I have to pay different referees or referrals every time? We'll cover how to handle that scenario a little bit later here. So now what we would do is we'd go onto a user, apply this plan to them, and we're all good to go for that user. So let's talk about some of those common examples here. So this is where I'm gonna go over very quickly how to use these on like a referral fee, and then I'm gonna have Christina from Movado step in and show us how they actually use post commission deductions inside of their commission plans. So if we were, let's say that we wanted to have a plan for our referrals. We have certain agents that always pay a referral fee, so we just want to build in referral fees to those agents' plan. The first step, just kind of build your agent's plan however you would normally build it. And then we would add on that pre-commission deduction. We would call it referral fee. We would say what it's a percentage of, usually referral fees are percentages. And now we run into that scenario where, sometimes you pay referee A, sometimes referee B, all that. What I would suggest doing in that scenario is just put in a contact called filler referral. And now what's cool about this is rather than you having 20 different commission plans for all the different people that you pay, you can just build this one plan one time, and then anytime it's used on a transaction, you would just go onto that transaction and change who the referee is. To show an example of that, let's say that we had Taylor use this plan. I just realized I had two similar plans here, so let me make sure I gave him the right one. I gave him the wrong one here. So let me demonstrate how easy it is to change that. We add on referral. So now when we go into a transaction and we apply this plan, start from the beginning here. So if we were to add on Taylor and add on that referral fee, now if we give it a click, all we have to do is say, oh, this was 123 Commission Street. We know that that was paid to Andrew. And it makes it that simple. So that's a common example on how to use a pre-commission deduction. I'm going to go ahead and turn this on over to Christina here from Movado so she can show you how easy and how simple it is to kind of set up what they do for post-commission deductions. So here you go, Christina.
Thank you, Taylor. Hi, everyone, and thanks for having us on today's webinar. So just a little background so it doesn't get really confusing. We're not more or less a traditional brokerage. So Movado Real Estate is on a subscription level with our agents. So I'm going to kind of walk through how we utilize the new features that Brokermint released. So for us, because each of our agents have a different setup, the best way for us to utilize it is that in commission plans, every agent's going to always have a plan built out specifically for them. And then we just create the plan under their name. So that way it stays more organized. So in this example, I'll just make myself the agent. And then within Movado, what we do is that on the agent side, the split is going to be at 100%. So we already have that preset for each agent. And then on the agent side, paid by the agent post-commission deduction is going to be our transaction fee. And also a great feature for this is that you can already have the tag associated to these deductions. So that way that's already taken care of as well. So in this case, to keep things simple, I'll just say the transaction fee is $1,000. And then this is going to be paid out to us. And then we'll add that. And then on the company side, we also have another preset deduction on our end. So this is again a post-commission deduction. What we also do is we pay out what's called a residual. So if one of our agents is recruited by another agent, we pay out a residual. And then, you know, again, we'll just do a dollar amount. Of 200, and then we'll just pick a, let's just say it goes to Taylor. And then we'll add that. So this is how we utilize it in Movado. And again, we're not traditional in the sense that we have a transaction fee and then we have a residual that gets paid out. But the useful thing is that for each agent, as they close each transaction, when we apply their plan, everything is already preset and we don't have to constantly do every little commission deduction when it's always going to be the same every time they close a transaction. And so at this point, then we go to the user, like if it were me, and then we apply their specific plan to them. Just, you know, for like a better sense of how to use this on a traditional sense, paid by the agent, you can preset E&O fees if that's what you charge, or if an agent has a specific TC they like using, you can preset those fees as well, paid by the agent and who their TC is. So those are kind of examples on how you can use that. But this is how we use it in-house.
Cool. Well, thank you so much for going over that, Christina. Everyone, thank you very much for, excuse me, Thank you very much for joining us today. And then if anything comes up, though, you know where to reach us. We'll be hosting more of these Facebook Live events as we go. So please, keep an eye out. We'll be posting more of these, and the recording will be available to all clients in 24 to 48 business hours, okay? But everyone, thank you for joining us on our kind of inaugural one here, and have a great rest of your day. And Christina, thank you very much for joining us as well. So big thank you to our guest hosts here today.
Thanks for having me.
All right, bye everybody.